Welcome back to Trading 360. It's time for a 360 round. We're talking about the PPI and tomorrow's CPI and what the Fed thinks about all of this possibly. Rebecca Walser, President, Walser Wealth Management, and Brandon Pizarro, President, CIO, Guidestone Capital Management. Thank you both for being here. So, Rebecca, I'll start with you. I mean, the initial takeaway was that it was hot, but there were some parts of it that were somewhat mild, and the revisions also showed they were somewhat dramatic, as it's been described. Some of your thoughts.
Well, Nicole, it's true. Food is down, and so that was a good indicator because we know that people are really feeling the pain at the grocery store. But otherwise, this is the fourth hottest CPI print really since April. It's the hottest print since April of 2023. It's the fourth month in a row that it came in higher than expectations. And year over year, we're still looking at 2.2. So I think that it's getting more in line, but the services being up hotter, Nicole, is obviously indicative of the fact that wages, on a per hour basis are going up even though overall wages are declining. So I think that the market at first reacted negatively. Powell obviously saying that he expects it to continue to come down in the coming months. It starts to again affect our potential for a September cut, but hopefully CPI coming out tomorrow will be a little bit more positive.
And so, yeah, we are waiting on that CPI print tomorrow. We'll have several, and before the July meeting, the June-July meeting, we'll have more prints coming. Brandon, some of your thoughts.
Sure. I mean, yeah, as we said, there's certainly a little bit of a hotness to this. Markets are reacting relatively well today, all things considered. I think the biggest thing that helped neutralize a bit of this hotter print was that decline, that revision from last month, where we saw that decline to negative 0.1% relative to the positive 0.2% that was initially reported. But I think the way the markets are trying to balance things out a bit more here is thinking about as prices continue to go up, obviously that bleeds into ultimately CPI and consumer prices. But you are starting to see signs that these higher prices are starting to destroy demand. McDonald's and Starbucks are two glaring examples where consumers are starting to say, enough is enough. These prices are getting far too high for me to just go through a drive-through or grab a coffee. So I think you might start to see a little bit of that turn, and perhaps that's why markets are generally green today.
Yeah. And Rebecca, you watch the market so closely. I mean, the first reaction was, oh, it's so hot. And, then they think about those cuts, and those aren't coming anytime soon. But the bond market now behaving, and you are seeing some back and forth action on the major averages over the unchanged line. How do you feel about the stock market overall?
Well, I've been very bearish, and I continue to be bearish for 2024, but it's more on the macroeconomic global changes that are happening, not so much necessarily U.S.-based, certainly not profit-based, because we've seen, obviously, earnings season do quite well, actually. So I think that the micro at the stock level is still positive. Corporate buybacks will help as well. But honestly, the global macroeconomics are just fighting this Federal Reserve and really making it difficult for Powell. I mean, I think that, with the weekly tick up in initial jobless claims last week, Nicole, higher than expected, with a down April jobs numbers that we got obviously the week before, that sort of is indicative of things are slowing down. But then you have continuously having these hotter PPI and hopefully tomorrow not a hot CPI number. So it just puts Powell in such a corner, and it really does continue to bring up the question of stagflation. Is it possible that we could have, an economy that's starting to slow down while we're still getting prices that are higher? And that is the most difficult thing for our Federal Reserve or central bank to deal with.
And thank you for that. I also wanted to hear some of your thoughts on, the asset allocation winners in the current environment. Brandon, you were also looking at maybe some value or ways to do this.
Sure. I mean, oscillation between value and growth is one that investors keep continuing to hope for. You see a little bit of starts and stops to that sort of thing. Value, of course, has its brief moment in the sun, and then growth continues to take over. You can't talk stocks without talking the Magnificent Seven and how much growth is just propelled through there. They are cash flow positive, so there is some rationality to it. Some of the other things I guess that we're concerned about as we think about the fragility of this market. Two-year yields have massive moves on CPI day. Last print, we got a 3 standard deviation move. So you can talk about volatility in bonds there. But the other thing you have to think about, too, is from a overall employment situation standpoint, white-collar jobs are starting to decline in a roughly flat year-over-year growth. That really tends to predicate some of these recessionary falls as those services in the professional services areas start to decline. So overall, we're tepidly excited. We don't want to get caught up in the FOMO. But we do realize there's a lot of momentum here, and quality is probably the place to be.
All right. Thank you both so much. And of course, tomorrow, the CPI print, which we're all waiting, bated breath here. Thank you both, Rebecca Walser and Brandon Pizarro. Thank you.